I'm just gonna play a quick snippet real quick, and then we're gonna jump right into the charts. Like, we're gonna do it as like everybody just go to your trader view, bring up your own charts. We're gonna open up the mics. Y'all can ask me what your favorite trades, what your favorite pairs are. It could be crypto, it could be Forex, it could be whatever. Because right now, we're about to chart up everything as we go. And like we said, this is an interactive. So everybody gonna have to get out their shyness, because shyness don't make no money. Closed mouths don't get fed, which is my motto. So please ask questions after we review this video. Just give me 1 second.
Even very experienced traders obviously can lose their discipline and can make mistakes and errors, because the nature of the trading environment, the risk and the uncertainty, obviously is challenging. So, and it's not about being perfect and being disciplined all of the time. It's about being disciplined more of the time. So I think discipline would be one. I would say another one I think is really important is confidence. That comes up very often as being important, particularly when I talk to if I'm doing work with clients in a hedge fund or in a bank. They'll talk a lot about the importance of confidence. And again, confidence primarily, two big things which influence confidence are experience and then competence. Kind of having the skills, the knowledge, the understanding, and the strategy to do the job. So confidence would be a second one. I think probably a third one would be resilience. I think that's probably another key thing. So being able to deal with the highs and the lows of trading, dealing with winning runs, dealing with losing runs, dealing with, changes in market conditions. That probably, bearing in mind the nature of the trading environment with risk and uncertainty, the consequences of each decision, I would say is probably pretty much a fundamental skill for traders to have. Then I think maybe something around adaptability and flexibility. So I think, flexibility in terms of in the short term, almost like day to day, week to week in the short term, flexing your style to take advantage of market opportunity, and then adaptability in terms of the longer term, in terms of, making bigger shifts in your trading style or your trading approach to adapt to different market conditions. And I think aligned to that is probably something around maybe creativity, idea generation, being able to find good trading ideas, and being creative in those ideas, maybe being a bit different to what other people are doing, is also, quite a good edge to have as a trader.
Bottom line, is there something you can do to increase your mindset so you're okay to trade with more money? You have to really study your wealth consciousness and what money means to you. What is a lot of money? Like, do you know that answer? Like, do you know the answer if I said, what's a lot of money? A lot of people say $1 million. Bro, $1 million is no longer that much money. $1 million is not, you can buy a car for $1 million these days. There's watches out there you can buy for $250,000. $1 million is not that much money anymore. So you have to define certain terms, like what is a lot of money? What is a little bit of money? How much do you need a month to survive? How much would you want per month? How much do you feel like you deserve every single month? Because when you trade other people's money, it is a slow process initially. Like, it's not like you just go in, you hop in, and boom, you have all this money, so now you're just going to make tons of money. You have to be okay with making money, like internally, because a lot of people will find themselves being totally fine taking small profits and big losses. And you want to know why? The fear of greed. Now, I'll explain what I mean by that. A lot of people inherently and subconsciously feel that they are greedy for trading the stock market or the Forex or the futures market. They feel that they're greedy, and they feel that they're greedy. They want a lot more. But here's what happens. Subconsciously and consciously, up front, nobody wants to be labeled as greedy. So if you say, yep, if I make $2 million, I would love to have $2 million, but I don't need any more than $2 million, because if I get $15 million, then that's just too much, and now I'm greedy. What will inherently happen is every dollar you make, you're getting closer to what number? The greed number. You're getting closer to becoming greedy, and your mind and your body will not let that happen. So what will you do? Self-sabotage. And that's one of the biggest breakthroughs I've ever taught and learned in trading. And that's why people all the time, all over the world, will be very comfortable taking small gains. Let me take $50 here, $50 here, $50 here, $60, $100, $200, and then boom, I just lost 1,000. Why? Why do I lose 1,000? Is it risk mitigation? No. And sometimes you'll go back through it because for a number of reasons, because your mind doesn't want you to make money. So yeah, man, you've got to go in and you got to really wrestle with yourself and figure out, are you okay making tons of money because you're not greedy? You're not greedy. If you, at any point in time, set it in your mind, if I make more money, I'm going to help XYZ person, or I'm going to do XYZ for this particular person in my life, that's not greedy. If you want to give, if you want to donate, if you want to do anything with your money other than hoard it to yourself, you literally and inherently cannot be greedy.
All right, folks, just wanted to show that real quick, and we're going to jump in these charts. Let's go here. Twitch, so like I said, we could, however y'all want to do this, open up your mics. Is everybody unmuted? Is everybody capable to be unmuted? Hold on, let me check.
They should definitely be able to unmute themselves.
Let's see. All right, yeah, everybody should be able to unmute. So like we said, like we about to get in these charts. The only way you guys are going to learn is if you start talking to me. What pairs have you been looking at lately? What do you want me to mark up? Does everybody know what a trend is? Does everybody know what a support is? Here's where you watched all the videos. If you have not watched the videos yet, that's what I'm here for. This is like an acceleration, not having to go over the videos to give you the basics. I can show you entries. I can show you stop losses. I can show you fibs. Like I've been diving in this stuff so deeply. I know what losses feel like. I know what gains feel like. I know all that. So what I'm here to do, guys, is just really open up to you guys to let you know what my experiences have been. And then I'll just let you guys digest real quick because eventually somebody's going to have to talk because we're here to trade.
I got a question. I want to know, how can we find good entry points without necessarily using the cash trap strategy? Because I'm familiar with marking up. You know, I understand the whole stochastic and RSI and making sure that correlates with the support and resistance that you have marked up on the chart. But I just want to make sure that I can enter accurately without necessarily having the entry point called out for me.
Yeah, I will say that entry point that keeps getting called out, always go back and chart your chart up. That's how you're going to learn how to start going in with good entries. That's literally how I learned. They would show the trades. I would jump in, swipe coin or whatever trade they call out, gold cup. Then an hour later, I'm going back. I'm looking at the entry. I'm looking at the stop loss. And then I'll start finding trends throughout what they called out. So then eventually, like, just mark up everything that they called out. And then I would just sit there and just look at it. I see where the TP1, I see where the TP2, I see where the TP3 is, to which what I'll do right now, I'll mark up what a Bitcoin trade was called out earlier today, and it actually hit a stop loss. And I'll walk you guys through that right now.
While you're marking up the chart, could you also, because I know that we have a few new traders as well, could you show us how you decided what the support, resistance, and trend line was? And then could you also, while you're looking at this one trade, show us what that might look like in traditional and HFX and then DCX? Could you show us all three off this one?
Right, because what I'm gonna do right now, I'm actually gonna go from a 4 hour and I'm gonna go all the way down to 3 minutes. and it can show you step by step what a swing trade would be, what an hour trade, 4 hours would be. If you're doing Forex, Bitcoin, there's no such thing, but you can if you want to. I could do a 5-minute chart and I'll break that all down for you, like for sure. So let me get all of this up out of here. I just keep doing it. All right, we're just gonna go straight bear real quick, because one thing that I want to show will be how to ride the wave, or how to look at these charts like riding waves. That's all I look at. Like when I come in and I'm actually looking at charts, like sometimes I hide everything. I don't want to see BBB. I don't want to see my pivots. I don't want to see none of that stuff. Hold on. All right, here's what I was trying to get to. So here's what I want to show you guys real quick. Like just look how Bitcoin just flows. And this is a 4-hour. There's ups, there's downs, you come up, you retest. Like right now, you guys will get to the point you can automatically see where highs and lows are at right now, just by looking at it. Here's how you get good without charting something up first. You can see where highs are, you can see where lows are. Here goes another low, probably retesting, shot up, made another high. Here's a lower high, just came back down. We could have actually put a trend right there because it broke it, came down. And the reason why I want to show you guys this run right here, I want you guys to study this chart. So just know, anytime the educators are calling out trades, it's based majority of the time off a 4-hour, 1 hour. So here's the emotional Wall Street cheat sheet. Let's see if I can fit it. I know it's probably small right now, but look how similar.
You're still throwing the chart.
My bad.
Oh, yeah.
All right. Guess it won't let me do that. All right, let me get back to this real quick. All right, can you guys see this chart?
Yep.
All right. I'm gonna have to go back and forth, just click back and forth, but just follow me. We're gonna start right back down at the disbelief. Like this is literally what every market does. Forex, stocks, it all does this. Here's where we're gonna look for buys. I'm a bullish person. Yes, sell-offs are cool if you could catch a good run, but this is where the entry points are. You guys are asking about entry points. Entry points is where disbelief is, where anger is, and where depression is. That's where we eat. These runs up, that's for the 75% that lose in the market. And here's why. They get in so late, optimism, belief, thrill. Oh man, I'm up in here. Market's like, nah, Got your sellers up here chilling, waiting. Bumps right back down. Then what happens? All that anger, all they sell, they think it's nothing's going to happen. Look what Bitcoin does. It did the exact same thing. Depression, depression. Oh, there's nothing down here. Kept moving. Oh, okay, we might have a little run. I still don't believe it. People sold off. You know what? This was a great point for us to get in. Depression, anger, disbelief. Look what happened. Shot up. Every market does this. You should love pullbacks. I love pullbacks. Pullbacks gives you the opportunity to see exactly what's about to happen next. All these markets do is repeat itself. That's all it does. It's up, it's down. It's up, it's down. So I really wanted to point that out. This cheat sheet, Wall Street cheat sheet, psychology of a market cycle. Study this. I thought trading was about numbers. It has nothing to do with numbers. It's emotions. Can you control them? Can you jump back in after you get knocked back down? That's what this is about. All right, I'm gonna chart up some calls outs that came through the swipe point today. Did anybody have any questions on that? Does everybody understand like how deep emotions are within this market?
Yep.
All right. So earlier, we're already on the hour 4 time frame. They had called out a buy. They did entry points right around 33,200. We're gonna go here. Let's see. 33. Till about 33,350. All right, that's good enough for now, just to show. So this was the buy. They had a stop loss. Right at 33,000. And then take profit. $36.5. All right. Stop loss here. Entry points. Hopefully y'all can see that's a little bit better. All right. Stop loss, entry points, take profit. So I'm going to go over why they even considered showing this an entry and then showing the take profit. So as you guys can see here, what they were looking for were breakpoints, retests. Went up, came down, went up. This right here, this is what they were waiting on. We broke, we came back down. He called a sniper trade about 2 days before, right here. He had actually called an entry on this one. And this was like a 2,000 pip run all the way up here. But back to why the entry was called. Because as you can see previously down here, there wasn't nothing left. And this is where the consolidation was. Correct. Yes, Forex. Top, Johnny. But like I said, I'm gonna break it down from Forex talk into HFS talks, because all I gotta do is just go down 3-5 minutes and I'll get there for you for sure. So this is majority for like the crypto, like I said, the 4 hour, 1 hour, or swing trades. So I'll get there for you guys for the HFX. All right, cool. So as you can see, here's what all the consolidation was. Came down, boom, jump back up. All the buyers were chilling, waiting right here, because they knew it had already broke from down here. So again, jumps up. Picasso, he knew. He's like, yeah, there was nothing left down here. So you know what? Let's go ahead and keep these entries right here. So I'm gonna go into 1 hour. So we can see how many chances that we did have to try to jump up in this market. So how you can always tell a good entry. Yes, it's good when it comes down and it breaks and then it goes back up. There's a lot of chances that it retraces, guys. Like what you guys got to know is retraces are needed. It has to come back. It will always come back. So whenever something is called out or some entry is called out, if you get in there late and you try to hop in, and again, you're buying where? Up here in this emotions where it's already up here. Just like we said, it's already up here. We don't buy in these areas. That's not what we're looking for. As you can see, a lot of people started buying here, probably got scared, jumped back up. This is where all the sellers were waiting as well. And if you guys don't know yet, this right here is a W formation. And that could probably be something that we get deeper into. I just want to explain more on how many times that you will see you have chances to get in an entry. So don't ever think that you missed out on an entry or a trade. That doesn't make any sense, because everything retraces. It may go up higher the next time, or it may go down further the next time, but it's going to come back exactly to where it needs to come back to. So again, it just kept running. Look how many chances that somebody could have hopped in to make money. 1, 2, 3, 4, 5 with that big run. Went past TP, got enough of it, came back, and then it was like, we're done. No more buyers. Sellers took it all. They just gonna run. Everybody made their profit. They're just waiting for another retrace. As you can see, this is where we are currently at for another retrace. Did everybody follow me on that?
So I got a question for you, Steve.
Yep.
So let's say what your entry point was. 33. Let's call it 33, right? So let's say your entry point was 33, right?
Correct. Right around 33,250.
33,250. So you talk about a retracing. So why wouldn't I just say, okay, it's dropped below that right now. So if I know it's going to retrace, why wait for kind of the signal? Why wouldn't you just buy it now and just wait to find out what the next sell point is?
That's the key. You can absolutely do that. But what you got to do is you got to keep in mind, anytime you come back to that entry point, as you can see, this came and broke though. If it ever breaks that trend, it broke that trend, to which I'm about to mark that up right now. So this later run right here, so here's where it broke this trend that was actually on an uptrend. I'm about to show that real quick. Switch that to so there was a few times. There it is. So it kind of broke it. It retraced back to that uptrend like 2 or 3 times. But here's the latest one. We'll do so what you were talking about, here's where you got to be wary though. Remember, we were on a bullish run. So as we're going up, didn't really come back in the entry point, boom, jumped up, kind of went back and forth. Here's where this retests were. Here's where you got to be like, all right, it broke the trend, but it keeps coming back to the trend. Sometimes golden rule, I say it touched that trend 4 times, just look for it to start retracing or going back for a bearish run. So it literally went from the uptrend, kept testing it. It's like, not yet. It wanted to come back, then almost touched that entry point again, but it didn't. Then kept going, did it again. The closer we got to that TP, it's going to get to the point to where you got to make a decision. Then it broke it both ways. Then we started down on the downtrend. So yes, you could have held from back here because it hadn't broke the trend yet. It was still in the uptrend. Here's where you start questioning what's going on. Not saying that you got to get out, but I'm pretty sure people got scared at this point right there too. Right there. It was probably like, I would have been like, yeah, it's about to go back down. But again, only reason why I know that, because I've taken losses trying to wait, sticking with the uptrend and going downwards. Did that answer your question?
Yeah, kind of. I guess what I'm getting at is, all right, say I entered in at 33,250, right? I missed my take profit, and then it goes past my take loss. So I guess my question is more about the take loss. So
right.
If I don't want to take that loss, why don't I just go ahead and just let the value of my investment keep getting lower and just wait for it to get back up? Now it might take 2 weeks, 3 weeks, whatever. I guess that's kind of the fear, right? That you don't know how long it's going to take for it to go back up to 35, right? So is it just a matter of patience, or is it a matter of...
Yeah, you just got to remember, like, we're trading margins though. Like, if you got Bitcoin and you're holding like actual Bitcoin and like Coinbase, what you just said makes absolute sense. Here, we in trades 4 hours, 1 hour, we in and out, 15 minutes, 5 minutes, 3 minutes, seconds. That's what this is about. So if you actually invested in the Bitcoin, absolutely hold. People gonna start buying. I bet people started buying right now because they hit 29,000. So that's what that means.
Okay.
I think I also understand where you might be coming from just because of that concept, but also if you try to take and hold a trade for too long, what happens is like you're no longer in profit. So
Right.
you could go so far. Like, okay, so let's say you enter a trade. Every trade that you enter is automatically out of profit because you have to automatically, the broker gets their cut, which is like a couple of like cents, but they get their cut. That's why when you enter and you're looking for it to go up or down, you enter at a negative. What you're then looking for is for the market to go in the direction you predicted. And so based on the entry point, we want it to go up. Now, let's say it goes down before it goes up. The reason you don't want to stay, even if it looks like your trend is not doing what you expected it to do, is because one, Bitcoin is a very volatile market. And so it going down means you're losing a significant amount of money. And if you try to stay in it like for a very long time, you could blow your account. So like you could go all the way down and then have no more money in your account to leverage. And so if you could break that down a little bit more, Stephen, because I remember the first time that I saw a Bitcoin trend go into the opposite direction, and I'm not going to lie to you, I prayed that day. And so if you could go ahead and you could just break that down a little bit more.
Yeah, because this pullback right here. Hold on, let me get out of that. Sorry. All right, this move right here, this drop down. So say if you would have held from where that stop loss is all the way down to where it just broke again to find another trend, which is it had to find another support zone. That's what this was looking for. If you would have held all the way down, that's 3,900 pips. Like you would blow your account. Like your account would be negative. Absolutely. So that's why she said that Bitcoin being so volatile, that's why those stop losses are always so close to the entry point, because it's not worth holding it to go all the way down to come back up when we can just get right back up in when it retraces back to where we want it to be at. Did that make a little bit more sense?
Yeah, and I think I'm new to it, so
yeah.
I still got to wrap my mind around margins trading and the pips and that part of it. But yeah, I understand where you're fundamentally going.
And another thing we might want to also consider is what is in your account. So if you have like a $5,000 brokerage account and you're trading cryptocurrency, you actually might be able to hold on and stay in there. But let's just say your account is only $100. You want to survive. By the time it gets to a certain point, you'd be looking at your brokerage account and it would say like 000 because it wouldn't be anything left in there. So I guess it also, like if you had $5,000 in your account and then you were also trading like 0.01, like it all correlates when it comes to like being in a trade and being able to handle going deep out of profit and then being able to return back in profit. But another thing is, if you're in the trading, you can make money in both directions. You don't really want to go too deep out of profit in that way. You would rather just get into the market for a sell. And now you're profiting down. And then once that sell is done and you profit there and it's getting ready to go back up, get in the market again for a buy. And so that's the concept, like being able to make money when the market is going down and when the market is going up. So you always want to be going with the trend. But definitely as we continue to go and as we continue to like watch the sessions and hop onto the Go Lives, I think it's gonna, make a little bit more sense over time.
Yeah, people's favorite sessions, those educators, watch those. Like, man, they drop so much gems up in there. Like that, they'll show you to the T what they do. That's all I've been doing, just studying favorite sessions like over and over and over. And then eventually it'll just come to you when you start coming to the markets. It just sticks out. Be like, oh, okay, I know exactly where I'm about to go. So any other pairs that y'all want to look at? as far as like, because I'll tell you guys, I've been looking at GGP USD. It's been running. Another thing I want you guys to always think about: pay attention to news and how the financial markets are doing, because I'm about to explain to you why any currency right now, everybody should be going against the US dollar. Doesn't matter what it is. Euro, USD, GDP, USD. Here's why. Gold, USD. Here's why. This stimulus package, what is that going to do to the value of the dollar? It's going to bring it down. Everybody going to get the stimulus money. They're going to raise the minimum wage. They're going to print more money, less value. So always stay focused on what's going on in the financial world as well. Because this, as you can see, I'm about to show you, and it's just going to be real quick. GDP is running. Gold started running again. And another chart I want you guys to always focus on is the dollar, the DXY. Because look, what did it start doing? Going down. Oh yeah, when I saw when I saw this, I was like, yeah, we finna go hit that pound. Hey, one of the most lucrative guys, GDP, USD.
Could you explain for people what the Dixie is?
Yep. The Dixie is the currency of the dollar.
By itself, without any other currency kind of like influencing it. So if you wanted to look at just what the dollar is doing, this is how you look at it without it being like paired with another currency. And all of the major currencies have their own, like we can look at that, like look at the strength of that currency by itself, and you could always find it on TradingView.
So I just wanted to show that real quick. I'll get back to the GBP USD. Let's see, who was it? I think Amon, you had questions about entry points.
Yes, I did.
Okay.
So yeah, my question was just trying to figure out how I can enter more confidently without relying on the cash trap strategy in relation to the HFX. Just using like the markups and all the indicators.
All right. So what are you reviewing the most? Cash trap?
Yeah, I've been using that strategy majority of the time, and I've been looking at USD CAD and USD JPY.
What? All right, so basically you want to learn how to mimic these entries on your own chart?
Yeah, correct.
Gotcha. And what were the pairs that you've been looking at lately?
USD CAD and USD JPY.
All right, looks like we're on the USD CAD right now. The main thing is to find where the highs and the lows are. And the only way that you'll be able to find where the highs and lows are when you get down to the 5 and 3 minutes in the high frequency Forex, the best bet for high frequency at least start at an hour. So you can see exactly what's been going on with the charts. My safe haven, 4 hours. So what this does is you can see what's been going on. The latest, what's the highest been, what's the lowest been. So we always do what the latest was. Looks like our resistance. This one's all over the place. Let's say, all right. And then we're just gonna creep down from 4 hour to 1 hour, and we're gonna do the same thing. What was the latest high? And we just gonna keep it moving, like I said. So just now getting down to the 15-minute, you can see a lot what's going on. Like we've already know what the next latest high is, which is looks like, see how all those sell-offs, it's gonna have to work its way back up. Support, hit support, hit support, came down. That was a sniper trade, hit support. Now it's trying to work its way back up. All right, here's where got to be very detailed. Because it's a lot going on when you get to the high frequency Forex. So let's do this. We'll do 15. Nice little break there. Right now, it's actually trying to figure out what's going on. I'm about to throw something out there real quick. Don't be alarmed. You guys will learn this eventually. But I'm about to throw a fib so you can see exactly what these educators are looking at. So say I got the resistance, and then I got the fib from the support. Now what this will do, always know that the sweet spot is 618. Whenever you guys like I said, I'm gonna give you guys all my metrics on this of what the fib looks like.
I have another quick question. Why is that the sweet spot?
Because that's what you'll find out. It's all mathematical. These percentages, time after time, Fibonacci, whoever that dude is a genius. Because no matter what, this is the sweet spot to where if it's going to go in the direction that you want for the uptrend, or even if you're going downwards in a downtrend. And what you'll find is in the favorite sessions, like people, the educators, they'll start talking about that once you start researching how fibs work. So here, this is a 5-minute chart. And what you could do is resistance here. I'll explain it real quick. Resistance here at this sweet spot. This is like the best possible entry ever. This is where you get in. The next 50%, majority of the time, when they're calling trades and they're calling things out, it's because it's broken right around the 50% EMA. So it's time to get in. So sweet spot, when you get to the 50, that's a normal trend. So you technically have 2 places that you could have got in at. Gets to the 50, that's the normal trend. Get to the 0.382, that's a strong trend. As you can see, it keeps respecting the Fibonacci trend line. Came back, tested a little bit, came up, touched it. All right, cool, we're out. So that's how you can come into trades after something has been called out. Come out to the charts, drop your fib out there. You can see exactly the direction that it could go. And as you can see, it will call out. It'll already have where you could take your profits at if you wanted to. To me, that's a TP1, that's a TP2, that's a TP3, and that's a max. That's a bonus. So I'm gonna break it down on the 3 minutes, because that's normally HFX. So let's say, let's see. You know what? We're gonna look something. Cash Trap has GGP top 2 right now.
That was pretty.
Yeah. Let's see. They have, you know what? Let's look at the USK. See what they got. All right, they called a put at 26.68. Here's why they called that. See how that just broke that EMA, the 50 EMA? It rose up, came back, tested. Is there any more buyers? It's gonna teeter from here on. Again, like he always says. So here's how I learned, like really guys. Cash trap, you call that, all right, cool. Not only am I gonna get in the trade, I'm gonna go back and see why they called that trade though. Let me go back to this 5 minute real quick. I want to see something. Okay, because that was the highest of the high. You can like you guys can even go down to the 1 minute, especially if you're doing the HFX. So how you're gonna find out where good entries are is going back and watching why they called those out. Because it was breaking the EMA, the 50 EMA. Now it's probably going, here's the next test. Now it just called a call. Oh yeah, no worry, hold on. Hey. Here's what I do, because I'm gonna show you guys. Hey. So the EMA is just the 50. That's like a guarantee it's going to start going in whatever direction it breaks at. So it's just basically the 50% average. And all indicators go off of EMA. Did that answer your question?
Yes, thank you.
Yeah, no problem. So remember when it just called out that call? It's reading that it saw this open and close right here previously. What you guys will find out is all you have to do is look backwards. You got to look backwards and study what was going on here before we can know exactly what's going on in the future. It's like I said, it's a repetitive pattern.
How far back should one be looking?
Anybody got any charts they have been marked up already?
Yeah, so you might have missed the question though. He said, how far back should you look?
Oh shoot. Really depends on what you're trading. Like I said, I always start at 4 hour. I literally marked up my chart all the way from the 4 hour. Because from here, you can see it keeps breaking levels. It keeps getting another support. That was first support. Boom, second support. Boom, third support. Now it's working on another support. So it's like we said, everything retraces. It's come down so far, it's gonna have to make its way back up eventually. How quick? Don't know. That's one thing about trading. We just let it come to us.
I guess for me, like I said, I'm new to this, but when I look at, I'm used to looking kind of at stocks. So I understand you saying it's kind of the trends is the same regardless, but I don't know if it's just my intuition, but I tend to, whenever I look at something new, I tend to look at the longest history I can, like whether it's 10 years or whatever, to see if it's generally on an upward trend.
Right. Oh yeah, we can do that too. I was doing that earlier.
Because generally, like with stocks, if it's not generally on an upward trend, like if I saw it go up, like if I'm looking over 10 years and I saw it go up, and then it came back down and it stayed down, then I don't mess with it.
Yeah, I got you. Like we can look at months. Here's what I normally do. I go weekly, I go months, I go yearly. We can do all that. 2003. Again, when you guys look at time charts like this, like look back at history, see what was going on. So as we can see, shoot, it hasn't been that high since 2003. It's been doing swing trades for, touched it, what, 2009. So yes, you can go back as far as you want. And yes, it's very beneficial depending on if you're doing regular Forex trading or if you're doing high frequency. Like going back in history is real beneficial for the regular Forex. Anybody got any questions? What a support is, what a resistance is, what a trend line is. You guys know how to mark up a trend line?
Not yet.
Okay, well, by where you at? Still watching videos?
Yes.
Okay. Yeah, that's the biggest thing, is just watching those videos over and over and then just mimicking what they're doing, and then eventually it'll come to you. But it's pretty basic. Like support will always be a spot to where it's once bounce back up. Think of support is the bouncy ball. That's where you're gonna start bouncing, looking for bullish runs. And then the resistance is like, hey, yeah, I don't know if I'm ready to go up that high or not.
I guess what confuses me sometimes is when you're drawing the support and the resistance, it just looks different depending on the time frame you're looking at. And so I never really get a good understanding of what's the best time frame to look at to draw the support and the resistance.
Yep, and it's kind of it depends on how you want to trade that day. Like, are you looking? You'll start hearing things saying like swing trades. Like what swing trades are is it's the time of the swing. That's what I like. I like the 4-hour, 1-hour trades. I'm looking for long runs. Maybe take a couple days, maybe 3. But that's just eventually that's something that will come to you. Because what you'll see is it doesn't matter if you mark it up on the 4-hour, the 1 hour, 15 minutes, it's still going to be the same entry price. It's still going to be the same resistance, and it's still going to be the same support. It's just the more time frame that you get in, the more intricate it's going to be to where you're just gonna have to be a little bit more in tune and keeping up what your entries and your stop losses are. But yeah, it'll just come to you when you start just messing around with the chart on your own. And then what I'm gonna start coaching you guys on is, I'm about to show you something, how we can know where the buyers are and where the sellers are at the exact same time in the exact same chart. So I'm gonna use, all right, and this is live right now. Watch this. So we're just going to use this support, and I'm going to use this resistance. Here's where this peace of mind is going to start coming to you guys, because we're going to play devil advocate as well. All right, now look at this. We've identified, using the fib, where the buyers are, where the sellers are. Here's where the buyers will be. Here's where the sellers will be. As you can see, we just ran past through that. Let me go down further so we can see all the activity. All right, on the 15-minute chart, all orders were filled down here, all the buyers. We up in there, we're getting in there, we're getting up in there, hit the sweet spot. What did it do? Broke the 50 EMA, came in. First it went up, came back, tested, sorry. Then jumped up again, came here, do this. All right, that's better. Here's where the sellers were, per fibs. Not enough. We're gonna go on the run. Next, what we're looking for, here's where you can also have your TPs on for your buys. Here's where you can have your TPs for your buys if it makes it there. But guess what? We've already marked up to where if we wanted to take a sell, and if this thing comes back and breaks the EMA, the 50, the opposite way, I can go for a sell right here. Why? Because we know once it breaks, here's where you can take your profits for the stop, for the downtrend, and also here as well, TP1, TP2. So here's where this peace of mind is gonna start. You're not even gonna have to worry about it anymore, because whenever you go in, You guys are going to learn, you know exactly where they are. Sellers, buyers, both ways. This is the sweet spot for the sellers, for the 618, if that's what we were looking for. But now we're in the uptrend. And we're just going, and it's just riding it right now. Yeah, fib is life. It's like once I figure this out, yeah, and that anxiety, this takes a little bit away, just a little bit. So right now, this is the trend that we're riding. So until something happens, till it comes back, and I guarantee probably when it hits about right here, it's gonna do a little test run. Is it enough? Is it not enough? Then it's gonna come. If it breaks, then we can start looking for sales if you'd like to. I'm a bullish person though. Right? Oh yeah, it's so much going on. You're right. I can see that teacup too. Let's say possibly. Yeah, it could possibly be a teacup for me. Shout out to the Gold Cup. Like there's so, like you guys just watch the videos. Like it's all there for us. So that's what I wanted to show you guys. Like once we start getting real good with these fibs, we're gonna be hitting stuff both ways. So when they say, "Oh, it's on the, oh my gosh, it's going down," we're gonna be like, "Yeah, we saw that coming." And if we want to go and make money on the sell, we can go do that too. Anybody got any questions off of this example?
Yeah, what tab did you select for the Fibonacci tool? I'm actually on TradingView now trying to find it.
It's say it's the third one down from the top. Just click on that arrow and then go down to fib retracement.
Got it. Thank you.
Yep. I'm about to do this real quick so you guys can see. Here's the fib levels. I'll go ahead and take a screenshot, do whatever you got to do, write those percentages down. Yeah, I can't wait to show you guys. Also, like, yeah, we're gonna be eating good, y'all. Yeah, exactly. I was gonna give y'all some homework. One, that fib retracement I just gave you guys, please just start using that whenever you're marking up your own charts, so you can get familiar with that percentages. Also, study this Wall Street cheat sheet. And what I mean by studying it is, like, when you go in for a trade, look at this chart and see exactly where you went in on that trade in. So you can start getting familiar of the emotions, because it's going to match every time. Also, let's see. Not only that. Yeah, coming in the next week, like, pay attention again to DXY. Pay attention to how the dollars move. That thing's about to tank in the next week. Again, dollar goes down, we trade in everything against the dollar. Yeah, because here's what I marked up previously. This was a support at one time. Now it's trying to figure it out. Now, if this possibly is resistance, like I said, in the next week, which this is the weekly chart, it's going to be real fruitful this month. So 3 things. Let's focus on these fibs. I'm about to just throw my metrics back up there again so you guys got it. This is life right here, guys. This is all the hard part. Next, please study that cheat sheet. Again, I'm gonna keep saying it, because I don't think it'll blow. It's gonna blow your mind when you start seeing charts move and you start seeing price action. All it does is follow that exact chart. Watch the news. Watch all that. Yep.
So just
So
curious.
are we supposed to go into the Fibonacci and input these numbers?
Correct. Yeah.
Oh, okay.
Yeah. You just have to go in and type them in your own, and then just check them. Because it's like we just said in the chat, like, this right here, like, this is gonna get us ready for the harmonics. This is literally what the harmonics is off of.
Okay, and probably change the colors the same way.
No, you could do, like, just always have 618, your sweet spot, and always have green 0.5. Okay. Those two are like a for sure. It's gonna go in the direction that the trend that you want it to go 9 times out of 10. Now, don't quote me on all the time, but that's just how it works. It looks like she dropped them in the chat as well, guys.
So those numbers, that's just part of a model, right? Like how those numbers come about. So like something you picked up from another model or what?
Oh no, this is like, go Google Fibonacci Like it's crazy, dog. It's like it's a mathematician. He was a mathematician.
Hi, how can I help?
So he got it down to the science of what a certain percentage would be. Yeah, when I started researching, I was like, nah, it can't be that easy. I was like, nah, on everyone, like for real, on that, like watch. I'll just pick something random. It doesn't matter what it is. The fib always works. Say we're doing Euro JP. Mark this bad boy up real quick. Oh man. What happened? Shot up. Sometimes it passes the sweet spot, but it always retouches 0.5 though. What is 0.5? A normal trend. What happened when it hit the 0.5? Boop, shot up. It's the same thing every time with the fibs. Like fibs is life, y'all. Like once you figure out how to mark up with the fib, it's a wrap. Game's over.
So do you place the fib? Do you place the fib between like any support and resistance in the
That's
chart?
basically how you can learn. Start off like that.
Okay.
That's literally what it is. All we did was locate in the hour chart what the latest high was and what the latest low was, and then just it does it every single time. Like for real, guys, you're gonna be like, nah, nah. Yep, every time.
So was what you did mark up an hour time frame?
Yeah, this is just the hour. And watch this. So even, really, got the boot. Hold on. All right. Oh, did it restart me all over? All right. Reason why me personally, I do 4 hour and 1 hour, because I'm all like I said, I'm always looking for the long runs, and during the day, I'm really really busy. But what you can see is even if we break it down, we'll go step by step. We'll even go 45 minutes. What 45 minutes does, the more you go down on the time, the closer you can get for more entries that you can see. So it's like I said, it don't matter what time frame we switch it, it's gonna be the same entries, the exact same entries. All you'll see is just more candles of most likely where it was trying to retest, trying to figure it out. It's the same thing every time. So that's why I like marking up 4 hour, 1 hour, because by the time you get down to the 15 and the 10 and the 5 minutes, you can see exactly how many times you could have got in. You could have got in once, twice, 3, 4. It kept tapping it, tap, tap, tap. Then it jumped. That's normally what happens. Even on the 5 minute, same thing. I like 5 and 3 minutes so I could try to get snipers. Like on the 4 hour, we really didn't see that candle, or the 1 hour, we didn't see this candle. This is a nice little close, open up, yep, tap the 50, boom, we gone, we up and running. This is a classic fib right here.
So would you not?
Go ahead.
You can go ahead.
No, I was gonna say, so basically, we're looking at history, right?
Mhm.
So basically, you're drawing the Fibonacci off of a 4-hour window, right? And you're basically saying that a trend has been set. So if you set it up to where it's going to buy at this entry and sell at this entry, that's going to happen sometime before the trend breaks.
Correct. Yep. That's right. Now I'll show you something. What if I wanted to figure out how far I can go past all this? Try something here. I'm gonna go right here because here's where the EMA broke. So what if I wanted to know in the future if it was going to keep running? Now, that top, that red, that's the resistance. What if it opens and closes and wants to run up more? There's an actual extension Fibonacci that can let you know where the next golden spots would be. So you want to know how the educators know where the next TPs 1, 2, 3, and 4 is? That's what this is. So if I see this open and close and turn this resistance into support, I'm already ready knowing where my possible profits could be at. It's like I said, we're gonna dig deep into all that further and further we get every Thursday. This is just, I gave y'all an overview, fibs both ways, future and present and past. But we'll get there.
So I want to go ahead and thank Steve. First of all, I love all track of time. I was all in the fibs, like.
Right, me too. Like,
right. I look at the time, I'm like, oh, okay. But this was really good. I'm really excited about how many questions people were able to go ahead and ask. I'm sorry, what happened? Javon is very proud. He's very excited. He's really grateful that you were able to go ahead and break it down for everybody and just really kick it all the way up, just answering all these questions and really helping people see that we learned this in this space. We learned this skill set. Here I am. And if you lean into the tools and the resources and study for real, you can absolutely understand everything that's going on and be a very, very profitable and also a solidly independent trader as well. And so I know that some people are going on to even trade with Matty Pips tonight. I know he's getting started in literally maybe a minute. So before we hop up, Steve, could you give us maybe 3 to 5 quick tips that somebody could use on the next go live session that they're getting on? So you said study. What does study mean to you when you're getting on a go live and you're just paying attention? Are you just listening out for trades, or are you doing a little bit more than that?
Yeah, tell you the truth, y'all start typing. When you're in the go lives, ask questions. It's crazy. I never thought that would happen. Picasso and Nick and them, the littlest questions, hey, you think I should probably get in on this trade around this time? The educators would literally tell you guys, nah, you might not want to do that. Just wait an hour, and then I'll send it to the chat. So studying to me was, yes, I would ask them. I would literally ask the guy, like, I'll be on the goal lines and I'll be like, hey, what's your favorite section? Hey, what fib section should I watch? That's how I found out all this stuff. So that's why when we have these Zoom meetings, like, you got to be open. Like, you just have to. Like, you're already here. Might as well say something and get some value from somebody that's been 9 years in the game. So studying is listening to them. Don't listen to yourself. Again, I did that. Don't listen to yourself. Secondly, just mess around with the charts. Like, daily. Like, what started helping me is, before you go to sleep, type up your charts, like mark up your charts, use your fib, and just throw some out there, what you think, what would be your take profits, what your stop loss would be, and then wake up and then look at the chart. But do that every night. Like, seriously, your favorite pair, you got to do that every night. Because when you do that every night, you're just going to start waking up. You're going to be like, yeah, we finna get in this uptrend. I already see this. I've seen this before. That's the only way you guys are going to get good. Just nightly, just put something up, mark it up to where you would like to see, where you think it was going to be. And then when you wake up, you'd be like, all right, it didn't go where I wanted it to be. Well, this is why. Let me try this the next time. So that's literally what I mean by studying. Like, you just got to do it, guys. Just chart it up before you go to sleep. Wake up and see where you're at.
Beautiful. Very, very, very excited, very grateful to have had everybody on the call. I know that Matty Pips is getting on right now, so if you trade HFX, it would be a really good time for you to go ahead and lean into his sessions. He does a lot of teaching between trades. He also does a lot of explaining as to why he makes the decisions he makes, and even like how he's looking at even the cash trap strategy, all of the things about marking up, et cetera, et cetera. Another good tip to just use, whenever you're looking at different scanners, be it Hourglass or whatever the case is, like, also mark up those charts. You could mark up the charts on top of the scanners, and you can also make the charts like naked and then save a naked chart, and then always be able to kind of like go back and forth inside of the scanners themselves. So you could see like what you would naturally find as far as patterns are concerned, and then you could pull forward the actual scanner itself. Like, what your like, whether you have like the traditional Forex and you want to use it on like the harmonic scanner, or whether you have like something like Hourglass, you can use, it's like having the premium version of TradingView. Like, lean into that, like mark up those charts, save your favorite chart strategies, like inside of those strategies, family, like just learn, lean in, take the action. And I'm excited, and I'm going to see you guys on our very next call. And so I hope you have a nice ending of your trading week if you don't trade crypto. And go ahead and get profitable, family. Until next time.
Holla, y'all.